I think the competition is very clear. China is going to start exporting its lower value EV vehicles to the rest of the world. Our economists expect that the EV exports for China this year will be accelerating. If you look at the prices of Chinese EVs, they are actually really coming down. And we heard from one of the biggest electric vehicle manufacturers, they are rolling out a vehicle below 100,000 renminbi. I mean, the price fight between the US manufacturers and the Chinese manufacturers will become a severe fight. But going forward, the market share of the EV space is going to be big, and China is going to pick a larger pie of the global EV space. And as the latest data in 2022, China have risen up the rank from the 5th largest manufacturer of EVs to become the 3rd largest manufacturer of EVs. So I think going forward, China will going to take a larger share of the global EV space.
I just wonder, how would that set in with the US's plans for onshoring the whole supply chain stateside?
Well, there will be definitely something they will attempt to do. But when you think about the cost of production, it's clearly much cheaper to produce EVs in China. And therefore, the sales price is much lower. If the manufacturing in the United States is able to reduce the cost, great. But to compete with China at this front, I think price eventually will come to a major issue for US manufacturers if they don't produce some of those in China.
Yeah, I think you have a very important point there that you make in the sense that obviously when it comes to scale, when it comes to quality, when it comes to cost, China does have an edge. And so we'll have to see how this plays out. As you pointed out and agreed with my comment, seems like China would be indispensable and hard to replace in this drive and in the US's ambitions to achieve their EV targets. I want to get back to the China markets. Is it a big comeback? I mean, now suddenly China has become super investable?
Well, I do think the comeback is ongoing. Obviously, we already had a big comeback of 50% rise in China equities. But if you look at the details, the concern now is, okay, market has risen so much. The fast money, the hedge funds have already bought. Positioning for those guys are already quite high relative to history. So the next thing is, okay, the long-term mutual funds have not bought. The domestic investors have hardly bought anything if you look at the fund flows. So looking ahead, I think there will be some profit-taking pressure from the hedge funds. But at the same time, the onshore investors, if you look at the positioning of the mutual funds, they have only started increased positioning in China A shares. And that means there will be a lot more money that could come. And then secondly, we have yet to see the onshore retail investors to come in to start buying. And if after the 2-session meeting in early March, we get further confirmation that the new leadership will be able to deliver policies that support a more sustainable growth outlook, then we will not be surprised that retail investors will start joining from mainland China. And we've seen before, when retail investors start joining, there will be a quite strong of inflows that could come into mutual funds, into brokerages, and therefore we do think there will be another leg of rise in China equity markets.